crypto dog ears. Yeah. Just the and the little red thing on the top.
Yeah. To distract from.
Yeah. I'm gonna get a hat with ears and a little red puff right here in the middle.
Looks like we're wearing the same glasses.
Oh, we do, don't we? Look at that.
Yeah. One of us needs to take them off.
Well, I'm blind, so. But I'm wearing a hat though, so that should make it different. That should make it different enough.
I look like I'm wearing a hat.
So we messed up the last show. We tried to do this once before, and now we're going to do it again.
You derailed me. You asked me a question I wasn't prepared for.
Yeah, doggone it.
It was the first time, actually.
Okay. Does that look better? Looks better. Okay, so we're doing ICOs, and we're doing the I guess it's the ICOs 101.
I like to stay with that term, the state of ICOs. The reason being because it's constantly in flux.
Okay.
So based on when you're listening to this, it most likely already changed. So what I like to do is create kind of two pieces to describe where we are at the moment in terms of the big picture of things, and then provide some guidelines that should stand the test of not time but some time.
Yeah. And you this is your field of expertise is helping people with their ICOs. They come to you, and you can look it over at a glance and tell them yes or no, like even right away, right?
Yes. Whereas we take a very specific slant on that, because so we take the slant of a venture capitalist onto that. So looking at all the typical check of points, but then adding what we know about blockchain to it.
Yeah.
So it has a distinct advantage, right?
Yeah.
You're basically getting someone that's used to buying ICO to get to run your ICO. So
yeah.
It's kind of letting the buyer tell you what he wants.
Yeah. That's what it should be. You know, if you're going to buy something, if you're
ideally,
going to put money into it, you want it the way you want it.
Yeah, exactly.
Yeah. All right.
Anyway, so let's just start off by looking at how this space evolved in the past couple of years. So starting with 2016, actually it started early, but we'll get to that. But this is just a look back over the last 3 years. And as you can see,
this is 3 years right here.
Yeah, so this is up until now. That's why it goes down at the end, because we're mid-June at the moment. So that will still go up from where it is right now in this particular graph. But a lot of people at the beginning of the year were kind of pronouncing that the space basically has seen its peak. But as you can clearly tell, it has not.
No.
Right? Yeah. Because if we then look at the summary on the next page, so in 2016, we raised, actually, why did I write 95? Oh, that was 2016, we raised 95 million in 43 ICOs. And then last year, 3.88 billion, but then this year already, so again, we're mid-June, over 10 billion already. And there's some outliers in there that we'll look into that.
Oh my God.
That created this, but as of now, we completed about 1,700 ICOs. But what's
in just this year, or
no, that's entire. That's the entire history of ICOs. Whereas it's not as easy as you would think to come by this particular data. There's some data that's self-reported in there, and so it doesn't perfectly line up. There's not one single resource. There's some self-reported amounts in there, but this should be fairly close to the truth.
Wow.
And as of now, there's about 1,800 in the pipeline. There's 1,800 ICOs.
1,800 more coming on.
There's 1,800 being conducted right now, and 100 that are scheduled to come out in the next 2, 3, 4, 5 weeks.
That's insane.
Yeah. So, but what I typically like to point out is that if you just look at the top 10 ICOs, then you see a certain pattern in a way, because a lot of those ICOs, I mean, the obvious one being EOS, which is kind of an outlier, and a lot of people comparing it obviously to Ethereum, and you've heard the term Ethereum on steroids, hence EOS, right?
Yeah.
And And so that's why they were able to raise this large amount, because
and that's the one that just raised 50 billion, or
Ethereum raised almost 4 billion. It's always reported as 4 billion. There's actually different reports on that, but it's probably 3.9 billion. And as always, as I like to say, they did not raise any US dollars, right? So
no US dollars.
No, they raised Ethereum.
Wow.
And you contributed Ethereum to a contract if you took part in this. But the important part here is to point out that in the last 2 years, those top 10 ICOs that you're looking at, they raised 56% of the total amount that was raised during that time. So
EOS, Telegram, and Petro.
Petro, yes. And so that's the question, whether or not you want to include that Petro. Again, this comes back to the fact that most of these amounts are self-reported, and the other fact is that none of those USD amounts are very likely to be accurate, unless these projects at the last day of their ICO went to an over-the-counter trader and just sold off all the Ethereum, which would be hard to do if you had 3.9 billion.
Oh my God!
That would create somewhat of a market effect, needless to say. So the top 50 ICOs raised about 3/4 of all amounts that were raised in the last 2 years.
That's amazing. And now, is this Telegram here the Telegram from the chat?
Yes, it is.
It is.
And it's all pre-sale. So this is in that 1.7 billion. There's no public sale included. So the half of that amount was included in the second stage of the pre-sale by 80-some VCs, which included Benchmark, Sequoia Capital, Kleiner Perkins.
That's unbelievable.
So if you look back at the birth and evolution of the ICO, so you got the first ICO, which was Mastercoin. That was in mid-2013.
Okay.
Back then, everything that was raised, needless to say, was raised in Bitcoin. Right?
In Bitcoin.
There was no Ether. And they raised $500,000 at the end of the ICO, which quickly went up afterwards. Because there was more awareness to the space all of a sudden.
Oh,
and
wow.
So,
okay.
They ended up probably at about 5 million then. But still, compared to what they could have raised now, would be tough, needless to say. And then Ethereum came along exactly a year later, raising about 18 million. And again, in BTC. And Ethereum, based on the then BTC price, was priced at 31 cents.
31 cents.
In the ICO. Today is, as you know,
oh my God,
around 500.
Yeah.
So then, again, a little over a year later, someone developed the ERC20, so the Ethereum request for comments number 20, that basically makes what we call now the ICO standard. So not all, but the vast majority of tokens generated for quote-unquote ICOs are now being generated using this particular standard. And then I put in a prognosis that we're going to see more and more airdrops. I mean, today supposedly one of the first airdrops on EOS should have happened. I don't think it happened. We'll check back later, but due to the delays with the launch of the main net, I think it has been postponed to next week.
Has it? Okay. And that was one of the questions that I asked you the first time, was that the difference between mining a coin and then having an ERC20 where you just instantly have 20 billion coins.
Right.
What's the purpose and what's the difference?
So with Bitcoin, there was obviously no ICO. So every single coin has been mined, and so I think the initial Bitcoin was obviously transferred by Mr. Nakamoto, supposedly, and I think it was to Hal Finney, that was the gentleman who died from ELS, who was one of the early developers.
Wow.
But then afterwards, there were different techniques then to actually create new coins. You could either pre-mine it, either you do it the hard way, right? So you just wait. So you in that particular case, to make it practical, you would create a copy of the Bitcoin blockchain, put it on a couple of computers, and wait, start creating coins, and that would be a pre-mine. But usually a pre-mine would be referred to as, hey, I'm initially fudging with the value of how difficult it is to actually create a new coin, and make it really easy, and so then create a bunch of those in the first day, because with all the proof of work systems specifically, so proof of work system as a consensus mechanism used by Bitcoin and also by Ethereum, those coins are being created for actually creating new entries on the blockchain, so as a reward. And the difficulty is constantly increasing for this particular mining behavior, while the rewards are actually going down. So
the rewards are going down, the difficulty is getting higher.
Yes. So what some chains did, and particularly Dash, I believe, did, was they artificially set the creation difficulty really, really low on the first day. And so they pre-mined bunches of them, because it was really easy to create them. So bunches that they could issue, which was some of the concerns that buyers initially had, specifically with Dash as a coin.
All right.
So did I mention Ethereum only raised about 18 million?
Only,
back then. Yeah.
That's crazy.
Well, yeah, considering that EOS now raised 3.9 billion. If you compare the two one by one. But then at the moment, I mean, as you know, Ethereum has a much higher market value still.
Yeah.
Anyway, so let's get our vocabulary right. A lot of times, and I think that's more prevalent in Europe, but also used by some lawyers over here, as this term TGE for token generating event, to describe the entire process of an ICO, which is never really correct from a technical perspective, because if you're creating the token, and as now usually on the ERC20 API on Ethereum, that event will take place in a few minutes, and you're done, and that's it. That's just the technical part of it. And then depending on how your actual offering works, you either only have the pre-sale, in the case of what we just were just looking at for Telegram. They never got to the public sale stage, or they just skipped the public sale. They figured, 1.7 billion seems enough. Let's not.
Yeah, that's enough for anyone.
Let's not add any more uncertainties to this process, and let's stop this altogether.
That's crazy.
And the obvious one is you could also just skip the pre-sale and the public sale altogether, and just as a project decide, well, we're just going to list it. We're just going to approach a couple of exchanges and decide, we just want to sell those through exchanges. And there's some advantage just to this, because you're not directly a seller, so you're not exchanging tokens for any other currency but the exchanges. And specifically, if it's a decentralized exchange, it's even better.
Yeah.
Right? Because then you don't have any questions about KYC, AML, etc. What we're going to talk about later. This doesn't even occur. So in theory, you could skip all this, similar to, in a way, an airdrop, I'd say. So I made this a new slide here to just break it down. This is basically like this was pre-Ethereum. So pre-Ethereum, you had the pre-mine, and after Ethereum, you basically created all the tokens at once. And the interesting part about this would only be as whether or not in your smart contract, which the ERC20 is a version of a smart contract, you decide how your token should react and how many tokens there should be.
Yeah.
So at the moment, there's no limit, as we discussed on Ethereum. So there's Ethereum is being mined as transactions are being created. Vitalik proposed a cap of 120 million back in April. Hasn't been implemented yet. But in terms of your question for mining, there's obviously also other systems that don't use mining at all, like Ripple doesn't use mining, IOTA doesn't use mining, NEM, NEO, Waves,
So all those coins have already been created?
They're already created.
Okay.
And there's no mining. It's a proof of stake system or something else. And some of the other cases, we'll get into that. But yeah, there's no mining of new coins at this point in time. You know how many are issued, and or you know that new ones are being created. So that's just a simple visualization of this is actually the token standard. So there's very few entries really, and that make up the particular token behavior. So in essence, what it does mostly is it enables any wallet that supports this particular standard to take your token regardless of what you name it. So as long as
like MetaMask.
Exactly. So as long as your wallet supports ERC20 and as long as you create your new token to that standard, then the wallet will be able to hold it. Same with exchanges that support that standard. So you don't have to worry about whether or not you can list your particular token because you use that standard that Ethereum put forth. So now that we're going into, I'm going to consider going out to sell tokens. The first consideration that I would suggest is what are you? Are you an existing business or are you a startup? We typically internally prefer to look at existing businesses. It's less uncertainty that you don't have. You have fewer hurdles to overcome, right?
Yeah.
If you don't already have to prove that you even have a business model or clients or employees that you have already been paying for some time, right? And the next question you should ask yourself, so do I need a token and do I need a blockchain? And for the most part, companies at this moment in time often don't need a blockchain. They're just fine with a database. I mean, blockchains are not the easiest way at this moment in time to maintain, right?
Yeah.
The other question, though, is whether or not you should use a token and whether or not you should use a new token, right? So that will be the question, is it valid for you to create a new token? So that when you see new on here, that's the ICO, basically.
Okay.
And we'll come back to why this is maybe not a good term. But mostly, right now, what we're seeing is startup projects, right? And they are mostly then going towards creating a new token versus actually asking themselves the question, do I need a new token and or do I actually need a blockchain? So if you're planning for an ICO, what you should be doing ideally is look at this process with the end in mind. So the end in mind for a lot of this project, specifically also for those people that are buying into this token, is how liquid is it going to be? Right? What can I do with it afterwards? If it's not something that I actually intend to use in massive amounts, where does it need to go?
Yeah.
And right now, as we know, most of the utility of tokens is that of speculating and trading.
Yep.
And so the question is, what does it take to get my token listed? And the exchanges basically do a very similar due diligence procedure now that venture capitalists do as well, and they also typically charge a fee. So if you want to go this route, and if you really want to be diligent about this, is look at what would be the highest standard that an exchange could apply, and can I fulfill those criteria ahead of time?
Yeah.
Right. And at the moment, that's most likely GDAX. So in the United States, right, which at I think the end of the month is going to be renamed into Coinbase Pro.
Oh, that's right. Yeah, you told me about that.
And they currently, because of their requirements, only list 4 coins. So they only list Bitcoin,
Coinbase,
Bitcoin, Ethereum, GDAX. We're talking about GDAX. Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and they just announced they're going to add Ethereum Classic, of all things, to their site.
Wow.
So you can find their requirements on their website. So as an ICO, it's a good idea basically to start there, and then you'll probably find out really quickly that you have to jump through a lot of hoops to fulfill their requirements.
Yeah.
So on a side note, so it's kind of odd that GDAX decided to add Ethereum Classic, which Ethereum Classic, if you remember, came about as a result of the DAO hack.
No, that was before my time. But
so that was back in July 2016.
Yeah.
So when the decentralized autonomous organization project was hacked.
Really?
And so the foundation, the Ethereum Foundation, decided to hard fork, and a significant number of members did not agree with that decision and stuck with the old code. And so that particular niche is now considered Ethereum Classic.
All right.
Anecdotal. So why are you going? Why is this important, right? So what a lot of projects in the past have overlooked to do is, okay, at the end of this process, what do I have? And for most of them, it ended up being, I have a wallet or two, I have some Ether in there, and then have some Bitcoin in another wallet, and now I have an office and 50 employees, and half of them are not really happy taking Ethereum or Bitcoin, and my landlord also wants to be paid in some old-fashioned fiat currency.
He doesn't have a Ethereum wallet. Yeah.
So at that moment in time, some of those people walk into a bank to find out that there has been the guidance to most of them to tell people that did an ICO to take a hike. Because they don't want anything to do with their particular kind of currency. So it's a good idea to start with the end in mind. So you need an account at a bank that's happy to take your proceeds that are coming from an ICO sale. And there's very few and far between. So
you can't just go down to your local B of A and...
You can. It's going to be a funny experience. I would highly suggest bring a camera and bring you along, and I think it would be a good story to tell. We should do this actually sometime, just for the kicks. I think that would be pretty funny. But no, as a matter of practicality, now you'll create an entity, and we'll get into this. This entity will most likely not be in the United States, and then. Funny enough, obviously, you need to go through all the typical things that lawyers tell you have to push your clients through. So you go through the KYC for yourself and other nice regulations. And if you put on funds, and if they are more than a certain amount, you need to provide a letter of funds, source of funds letter for that. So you want to typically involve someone who has done this before. I mean, anybody is happy, obviously, in my opinion, happy to try themselves, but they're not likely to succeed at this moment in time. Unfortunately, I wish it was different. I mean, I wish everybody could just go to the local bank and say, hey, I'm creating a Bitcoin company, or I'm creating a blockchain company, I'm doing a coin offering. Yeah. And
go to Wells Fargo. I hear they'll let anybody in.
Yeah, initially, actually, they were considering this, but they kind of changed their mind in the meantime. So, start with the end in mind. If you actually need to go back to fiat, which is the case for most, that's where you need to start. You need to have an account with an entity that's copacetic to this form of transaction. So if you end up raising the amount that you have in mind, whatever that might be, $5-10 million, then you need to also have a plan on, okay, this is the end of the ICO, and now I need to deposit some money that is fiat money into an account to pay my rent and my employees and my gas bill or whatever that might be. All right, so getting listed, right? So we're always coming back from there. This is what the exchanges were looking for, but this is also what you should be looking for as an investor, and also what you should reflect in your white paper, on your website, etc. So first of all, yes, you need a team. The team needs to have some experience, ideally in the blockchain area, and you don't want to link it back to a LinkedIn profile that shows that your CTO was an intern at Google until last week, and so forth. And you want to be familiar with, needless to say, the regulation in your particular area where you decided to incorporate, if that's what you did. There's still a lot of projects that you're using this idea of foundation. We kind of abandoned this model over a year ago now, because the reason being that the Ethereum Foundation, that was kind of the first time that this model was tried, could legitimately claim that people that gave them Bitcoin in this particular case didn't expect anything back, right? So they made a donation, right?
Yeah.
Now this model obviously has been tried successfully, quote unquote, a bunch of times. So the people, I'd argue, that gave tokens or Bitcoin, Ether, whatever it was, to that foundation and got a token back, they probably expected something back. So I don't really see the huge purpose of doing this as a foundation anymore, at least from the perspective of raising funds.
Yeah.
Because you're definitely getting something back. But anyway, at the heart, as always, should be your technology. I'll break this down. You need to speak to market and demand. Again, we're taking the perspective from, hey, eventually I want to get listed, so you need to have that, show that, explain that. The most important part from our perspective that's missing most of the time is any useful explanation to your crypto economics. What does your token do, right? Why do you need this particular thing? What does it do that Ethereum or any of the other existing cryptocurrencies don't already provide? So some additional element that makes your particular implementation of ERC20 that you created, your particular version of your smart contract and your token, needful, so that you can actually have a reason to issue it.
Yeah.
Right. Otherwise, just use one of the existing tokens. So then I just include the IDEX logo, which is the decentralized exchange. You would think that they would have lower requirements, and they do, but they still have requirements. So even though an exchange is decentralized, you can't just create 10 million tokens and boom, there they are the list, and you still have to submit those. And
what does that usually cost?
So decentralized exchanges do not charge anything. Centralized exchanges, I've seen numbers between $50,000 to up to $1 million, and supposedly someone just told me that the most popular exchange just asked for $4 million in that.
$4 million.
But I think this was, was specifically to get to the front of the line.
Oh, okay, got it.
So then you want to know who you're talking to. So you want to know whether or not you're going to have access and or connections to lots of people that will buy in the pre-sale stages. Right. As such, they typically will expect discount to whatever you're going to price the token at in the quote-unquote public sale. And or, again, comes back to what are you actually doing with your token? Is this a token that is intended to increase the community, which you could do, right? Which is one of the most useful cases, in my opinion, right? If you already have a large community that you want to reward, why not just start out giving everybody tokens, and then they can earn more as they go, right? Yeah. And this way the token actually becomes worth something. In the pre-sale stage is what you'll see now a lot, because you have to provide certain minimum contributions to a pre-sale in order to then earn those quote-unquote discounts. There's people out there that aggregate in syndicates. So Europe and Asia and the US, you'll find different syndicates that then pool their money to contribute together to be part of these pre-sale stages, which is an interesting model. And I think that's going to increase, but we'll see. There's only so many messages that I can identify that make sense in promoting your blockchain project or your new token. That is the most obvious to me is, do you remove the middleman with your new token economy? Is there someone that made money before you introduced your particular token on being in between these transactions and your rent seeking, and this rent seeking is replaced by your token? It does it faster, does it cheaper, hopefully both, right?
Yeah.
Second one is, if you can engage a community to a higher degree. The typical example is always your loyalty system. where you have your frequent flyer mile that's now a token. Your customers will most likely appreciate that.
Yeah.
And then lastly, and that's the most complicated to do, and that comes back to token economics, are you aligning the interest of the stakeholders that actually have the ability to hold this particular token? So now that we already had 1,700 projects out there in the wild,
Wow.
if you have a new project, you want to know where you fit into the current landscape. So are you creating new currency? If so, why? What does it do that the existing currencies not only do? I mean, we have bunches of privacy currencies now, right? Zcash, Monero, and other smaller ones. We have lots of developer tools, and EOS will increase those. We have a bunch of governance applications out there, a lot of value exchange applications, etc. So you want to really know what niche you're falling into and which other applications there are. So as an allocator to the space, we'll always try to look at every application that's already out there and pitch them against each other, see what are the criteria that apply to the space. Because at the end of the day, I think one of the mistakes that people make is they look at blockchain and cryptocurrency as if it was its own industry in its own merits, almost like back in the .com days. Internet was looked at as an industry. We don't really do this anymore. It's a tool, right? So you use it for whatever your actual business purpose is, and then you implement internet to this. And
helps you get there.
And that's the way you should be looking at blockchain as well. But the discussion, for some reason, hasn't quite moved on to this yet.
Yeah, I think people just are having a hard time visualizing what the heck is blockchain. How is it different from the internet? What is it?
Right. I think there's a lot of fundamental misunderstanding, and everybody is not everybody, but a lot of people still to this day make allocations to the space based on simply the merit of mentioning the word blockchain, mentioning the word cryptocurrency. Very similar to back then when everything they had a .com behind it.
Oh, it's a .com.
It's a .com.
It's a .com. What's
it must be worth something more, right?
Yeah.
I think Amazon is still Amazon.com to this day, by the way.
Yeah.
Which is kind of funny.
Yeah.
But yeah, it's the same kind of paradigm. But that's why I think it's important to look at what's the market at this particular moment in time. And then here are the essentials for your white paper, and I see these essentials missing more often than I find them. So first of all, if you're actually building a new blockchain or building something on the blockchain, why do you need this? And then why do you need this particular one? We'll get to that. Explain why you're creating this token. What does it do that the existing tokens out there don't already do? What's the protocol you're developing on, and why? And then finally, and that to me is always divided into two aspects, and that's something that the really good white papers will at least hint on. It's like, are you decentralizing it? Are you decentralizing it truly, both from a technology perspective and also from the business angle? So if at the end of the day the community owns all the virtual assets that you're issuing, and they're pulling all in the same direction, and you're just one of the owners, that's the ideal scenario. So the opposite would be I just create another rent-seeking entity, and that's what you see most of the time, that a project is simply replacing other rent-seeking entities with their own rent-seeking entities that are now using a token, and that's pretty easy to identify, but most people don't seem to bother right now. So I just picked randomly a couple of points that seemed important to me, as well as I more or less picked randomly a couple of blockchains. So everybody at this point in time who is not building their own blockchain should be aware of what blockchains are out there and what are their characteristics, and obviously how do they apply to your specific application or system that you're suggesting to build, or ideally that you already built a prototype on at least. So you got Ethereum, you got EOS finally out of testnet, you got Stellar, you got NEM, and then you got Hyperledger on the right. And you know why I'm chuckling. And so you want to know what are the transaction costs, what are the transaction time, what's the consensus mechanism, the degree of centralization. Right? A lot of people argue that EOS is still very highly centralized, having 21 block producer nodes, right?
Okay.
That make most of the decisions at the moment, creating most of the blocks, and then the coding language. And here specifically, do you have developer support, right? How large is the size of your community that you can tap into? So you're ending up with a somewhat shorter checklist that I aggregated here, but again, they only address the high level. So you want to create a token issuer that will almost not be in the US. I'll go into that a little more. You want to create your banking infrastructure that you'll need, and hopefully have backup for that. I wouldn't rely on just one bank. And so I kind of try to put them into the order that you want to address those points, right? So you want to start building your community if you don't already have one. So build them on Telegram, on all the other different channels that people that allocate to this space are paying attention to at the moment. Write your white paper addressing things like your smart contract, have that audited, address the point of token distribution. What's frowned upon for the most part for people who allocate this is if those projects retain a large amount of the tokens at the end of the process. Right, and we'll talk about KYC and AML in this context specifically. And then you got to start, if that's one of your objectives, with your exchange listing procedure fairly early. As I said, ideally you look at this before you even start the overall ICO project, obviously, because it will take weeks at this moment in time. They're all backlogged, needless to say. So my always favorite, is it a security? And we finally had some more or less good news from the SEC.
Did we? Was it good news?
The SEC chairman said that Ethereum is not a security, although it was a little bit like, yes.
Wait, when was that? Yesterday. He said Ethereum is not a security.
Yes, that's why the market came back. And it's a little bit like saying, yes, fish are not birds. But that's just me.
Fish are not birds. That's awesome.
So this is a slide that I've been using for 2 years now. So because I wrote a blog post, I want to say it was in 2013, about the FinCEN guidance paper. So that's like 5 years ago now. So for me, it's like deja vu. A lot of Groundhog Days in between. So as we kind of agree on the fact that Bitcoin is a commodity now in a way, although in my opinion, it's a commodity right now and a currency maybe tomorrow, who knows. At the end of the day, as I always say, it's software, right? Mm-hmm. Needless to say, IRS wants to tax it. They tax virtual currencies as property at the moment, and probably for the foreseeable future. And again, we're talking about the United States, right? So, and then FinCEN a long time ago in 2013 put out a guidance paper where it said virtual currencies are money. But then if you look across the borders, and again, I mean, virtual currencies and blockchain and tokens, none of those are limited to the United States and its airspace. They are very much international, actually more so.
Absolutely,
I mean, it's not a US topic, and there won't be any agreement between those agencies in the United States for years to come. I mean, even though some of the states have kind of developed newer frameworks now for blockchain specifically. You probably saw what Wyoming is trying to push out, and Nevada to some degree, Delaware to some degree. But also, if you listen to those politicians talk, they will readily admit, this is the start of something that we expect to take a decade to develop before next certainty. So that's not good news for anybody who had thought, hey, I'm going to create a Delaware corporation that's selling tokens, which still once in a while I see happening, and I'll just tell them, okay, you're putting your life in danger because you just make yourself a target to these particular agencies that are still trying to regulate something that they really don't have a business regulating. And so as a
no, they don't.
So as a result, what we see now with those 1,700 ICOs that are underway right now, they almost always exclude the United States from the buyer's perspective, and almost always don't have an issuer that's situated in the United States. So that at the end of the day, there's no play for any of those agencies. Oh yeah, I added this particular slide because I wanted to remind the SEC specifically that are we going to functions of money?
We're still.
Oh no, well, let's talk about the SEC and their mission for a second, because
I don't see that one. No,
that's okay.
Okay, good.
That seems to be forgotten, because so the first mission is to protect investors, which mission accomplished. Everybody in the United States is now excluded.
We're well protected.
And the other thing is, what they did early on is they defined essentially, for the most part, what an investor is, right? So if you want to invest in certain assets, you have to be an accredited investor, right? That means that you have to have made $200,000 every year for the last 2 years and expect to make the same this year, or show them that you have at least $1 million in liquid assets, excluding your family home. And that's not true for the vast majority of people in this country. So they don't get to take part in any of those more interesting investments. But then one of the missions is also to facilitate capital formation. And they like to mention those every time they speak about the ICO procedure, and they don't want to impede it, they claim. But the point is that simply by talking about it, they're impeding on it. Right. So coming back to there's always this discussion around, we're going functions of money. Okay, we can do functions of money. I like to do principles and recall principles, because so in the case that you're creating a currency, right? So and your token might have some currency aspects to that, right? You just want to remind yourself, okay, what's a currency? It has these 3 functions. So it's a unit of account, a store of value, which I find questionable when I look at the US dollar and its history, and it's a medium of exchange. And so the US dollar is really, really good in terms of it being a medium of exchange. In terms of all the other elements, not so good anymore. But in terms of being a security, the test in the United States that lawyers in this country always like to quote is this Howey test. Again, it comes back to that something somewhat unique to the United States is this case law system. It's like, hey, we tried this once before, so we give it a name and we'll use the same criteria for something that's happening later. Internationally, we look at this in very simple terms. So if I give you money and I expect it back, that's a loan, right?
It's a loan, yeah.
If I give you money, don't ever want to see it again, don't expect it back, it's a donation. Okay, we're done. If I give you money now and tell you, hey, tomorrow bring me bagels, then that's kind of a pre-sale of your bagel.
Yeah.
And if I give you money and you give me a piece of your podcasting business, that's an equity.
Wow.
So that's relatively simple in my mind. So I'm not quite understanding why we need an old Orange Grove Pharma test to determine what a security is. But again, that's just the United States at this moment in time. So we sold tokens, and now what a lot of ICO advisors, lawyers, etc. Suggest you do is get to know your customer, something we call KYC, know your customer rules, and in the US Patriot Act specifically, it's called PIP, and I forgot what it stands for, but it's unimportant, because what's more important in this particular context is it's most of the time it's not good advice. Why is it not good advice? It's somewhat of a catch-22, because a lot of these token sales that happened, they suggested that they're selling a commodity, right? And Now ICO advisors refer to it as utility token. It's not really a useful term, but since everybody is using it, okay, let's stick with it. It's a utility token.
Okay.
Well, if it's a utility token, it has utility, then I don't really need your passport, do I? If I go to Walmart and buy a blanket, they don't ask you for an ID, right? And so I was a state prosecutor for a very short time, but what I learned immediately is if I don't have to prove something, I'll try to shift the burden of proof onto you. So if you did KYC and AML procedures, then I assume that you assumed that this is security or that you somehow fall under banking regulation. So now you prove me that it's not a security.
Wow.
Yeah, another famous instrument. ICO platform.
Sorry.
No, that's fine. ICO platforms is totally fine.
Got the lemons here. Do we go?
Yeah,
for
we
lemons?
got the lemons, the SAF, the simple agreement of future tokens. Now there's derivations of that joke. So a simple agreement of future tokens. I just told you about an equity, how you define what an equity is in international context, right?
Yeah.
I pay you something, and then in the future I want to participate and get something from you. Well, that's essentially what a SAF is. So you just created a new security. Congratulations. That
just created new security.
So not a good idea overall. Stay away.
Wow.
Also stay away from the next topic. Do we have community? Don't stay away from community, but stay away from platforms. Platforms. So there's this rumor that's being spread by people that created platforms that there's such a thing as a regulated ICO. Bubble burst. There's no such thing as a regulated ICO.
Yeah.
It's like saying it's tangible software.
Tangible software.
So you either have a token or you have a security. It's either or. There's no security token either.
No security tokens.
No, because you just by making it, by attaching the term, you just negated anything that makes a token. So you can't put it on an exchange. No exchange will take it, right? Specifically not in the United States, and most other jurisdictions won't let you do this either.
Yeah.
And so your token is no longer a token.
Yeah.
And same with if you're trying to force your token, your initial coin offering, that's a really initial token offering, into any other of the paradigms that fit under the SEC exemption world. All you're doing is you're negating every aspect that made the token generation interesting in the first place. Yeah, no professional allocator will ever allocate to this. There's only a handful of newbies that will ever go for that.
Wow. Now, what if a company like, kind of like me, I just created a token for fun.
Yeah.
Because I wanted to learn how to do it.
Okay.
And I didn't have an ICO. I'm not raising money for it.
All right.
Can I put it on exchange?
You can try. That probably won't take it.
No,
I mean, you're missing, obviously, most of the things that make a token interesting, right?
Yeah.
I mean, is there market demand for it? And that's the first thing that in an exchange mind that's interesting, obviously, is does anybody want to buy it, right? Do you need to at least explain to them why they want to buy it? And everything else is kind of like the reasons why not to list it that could get their particular enterprise.
Well, let's go to Dogecoin.
Right.
And it was supposed to be a joke, right?
It was supposed to be a joke, yeah.
Okay, and it got listed on exchanges.
It got listed on exchanges. It was very early on. There were a handful of coins at that moment in time.
They're mining those, right?
They're mining those, yeah.
Okay, and now people are exchanging them, and you can do pairs with Dogecoin and Ethereum, or
yes,
right?
Yeah, they just got lucky. They were early. It wouldn't happen again today.
It won't happen again.
No.
So I can't put the Wonder. I can't put the Wonder Dog token on there and expect that to make a pair with
I wish
Bitcoin.
I could help you there, but no, unfortunately, you can't do that.
That's funny. Oh my. Well, there goes my hopes of buying a mansion in Beverly Hills.
So, but yeah, I think we have one last slide about community. So
community. So
that's okay.
Bam. There we go.
Yeah.
So the Telegram,
that's
there's
your
Telegram.
Hope, create a
Reddit.
community.
Yeah.
So if you have a community that supports you, eventually it might make sense to download some tokens of your own if you find a good enough reason for those people to see value and utility in them. Well, that's what the community is good for. But in the sense of this particular slide, it's just a matter of, hey, you want to start working on this early and coming back to what's the purpose to work your way backwards from getting listed on an exchange. They will ask for all three of those. So you don't have those, you already feel you don't even get to submit your token typically, even for, or especially for the decentralized exchanges. If you want to list it on IDEX, etc., they will look for those checkpoints, so that allows people to go back and see, okay, what is this particular token about, and what do people say about it when there's actually not much other demand for that would cause people to buy it. And so lastly, and that's something and that's really last, that we'll probably see more of with the release of the EOS mainnet is airdrops. So the next couple of weeks, there are a couple of airdrops already scheduled. Again, Everpedia was supposed to happen on the 15th, which I think is today. And I don't think it's going to happen, but there's a couple more scheduled. So that's the idea that, hey, there's already someone who paid for that particular development, and they either paid for that in EOS, or the EOS fund paid for that in this particular case. And so the community at large, the EOS holders, will get tokens from these new ICOs. And actually they are no longer ICOs, of course, but these token offerings in an airdrop. So you hold a certain amount of EOS. So let's say you hold 1,000 EOS, you get a certain number of tokens of this new particular application that was built on top of EOS. And I think Everpedia, I forgot what some said. I want to say it's 5.1 tokens for every EOS.
Wow.
I have to look it up, but it's easy enough to find. Some of them will require you supposedly to hold a certain number of EOS, so you won't see most likely certain airdrops if you don't hold at least 100 EOS.
All right. And I know that on Telegram, I see that happen all the time. Companies are doing airdrops, and you can sign up and get. You sign up with them, you get 30 of their tokens just for signing up. Yeah, as a marketing project. But these are these new ones supposedly, again, has to stand the test of time, are going to be different in the sense of, hey, we're going to airdrop 90% of them and retain 10%. And that's our whatever war chest, but we'll never actually going to sell any, but because so many people now have them and they see value, and they ideally earn more in the case of Everpedia, more of the IQ tokens. They now have value, and so you won't just dispose of them, or you will ignore them. And since the company itself retains a certain number of them, they now also have value for the company without ever selling one initially, but be able to sell them later. Wow. Okay. Very cool.
I think I made So one thing I just learned last night by talking to a colleague was, so now there's also custody implementations that extend into the ICO. What I mean by this is, so if you want to run an ICO and you have more than just a few Bitcoin and Ethereum that you're garnering, it might be a good idea to get into a custody solution early. What that means is they will then hedge the volatility of that particular raise for you. So
what does that mean?
So let's assume, simple example, your initial coin offering, your initial token offering is taking 6 weeks. During the 6 weeks, you'll still see a lot of volatility, then depending on what type of tokens you accept in exchange. Let's say it's not only Ethereum and Bitcoin, but it's also Litecoin and a couple of others. You could face a lot of volatility during your raise. I mean, we had those examples in the past where when you hit it wrong and you raised $10 million at the time, when you received these particular ether, at the end when you were able to liquidate this, so after you got distributed all your tokens, you might have faced a big drop in that particular Ethereum value, let's say.
Yeah.
So you raised 50,000 ether. All of a sudden, this 50,000 ether, if you look back a couple of months ago, when it was worth $1,000 a piece, right? So it was a lot more, and then now it's around 500. So you're looking at half that. So these solutions would allow you to mitigate this risk at a 0.1% charge typically per month. Okay. So they'll mitigate this. They'll give you sort of stability during your race.
Wow, that's kind of cool.
Yeah, I think it can be pretty useful, especially if you're looking at the longer ICO. If you think about this in EOS's case, right? They did an ICO for 300 days, so there was a lot of volatility.
Wow,
during that time. Yeah. Right. So there it makes a lot of sense.
What was the high for Ethereum there?
1,400.
1,400. Wow.
Good time to sell.
Yeah. All right. So these are some of the things that you explain to people when they're coming to you with an idea to launch an ICO, and you have them go through this, and if they can't check all the boxes, then they need to go back and reevaluate whether or not they're suited for an ICO.
Exactly. And so the scenarios we see is like three types. So we got a company that just already has a business and now has heard all about either the easy ways to do this, right, supposedly, and they want to learn more about this, and then we'll try to see whether or not there's a fit. A lot of times there's none, right? Needless to say, we'll just tell them, well, eventually the blockchain might make sense to you, but right now they're all still very much alpha and beta, and so wait until one emerges that makes sense to you for your particular implementation, unless you have something very obvious like your loyalty system. Then the other scenarios, you got a quote-unquote startup, and then you obviously have to check off way more boxes, right? So you'll make sure you actually got a team, you actually have a business case overall, because that doesn't go away, right? At least not for now, at least not if you're not truly building a truly decentralized autonomous organization, which 99% of the time is not the case. But there's a lot of interesting projects and a lot of interesting ideas, but most of them are still half-baked. It's very complicated to come up with good game mechanics. There's very few people who understand how to create those. There's a lot of industries in the space that have never worked together on this particular level. So I'm thinking specifically about software developers and lawyers and economists that now have to tightly work together to see that this particular idea, i.e. the economics of that token, are actually be built into the software. And you saw a lot of projects fail for that particular reason. And we follow the listings of coins on a daily basis. Between the last time that we talked and today, there's 17 coins that just vanished. They're no longer on CoinMarketCap. That just disappeared.
Any of them that were notable?
No, nothing that was notable. The only thing strange that I observed, because I always go through my usual deck that I've been using for such a long time, is that between the last time that we two talked, one of the big names fell out of the big list of raises.
Really?
Yeah. So I still have to draw down, but if anybody listens to this and has an explanation, please email me why Tezos is no longer listed on CoinSchedule.
Huh. Wow. No explanation, no news, nothing, just...
there was one news that doesn't seem to be necessarily related. Again, I'm not privy to the inside thinking of CoinSchedule. It could just be a technical hiccup. Less likely. It's probably intentional, because it's just this particular one.
You would think there would be other ones if it was a technical issue.
One more thing that there's not doesn't seem to be a pattern. It's just entirely gone.
Wow.
Something anecdotal.
Well, interesting, and obviously very, very, very valuable for people that are looking into it. They're thinking, "Oh, we should do an ICO."
Yeah, and again, so there's like a lot running right now, and I don't think a lot will happen in the future that's going to be very successful. Just doing another ERC20 implementation.
Yeah, and now with that news that you said that dropped yesterday about Ethereum, right?
Yeah.
Okay, so what does that mean for all the coins built on the Ethereum network?
Nothing. No, it's not related.
Not related. Okay.
No, because it's not talking about Ethereum. It's talking about Ether.
Ether.
Right.
Okay, that's the.
Yeah, because one is the blockchain. Yes, the blockchain was never a security. The blockchain is just that. It's just a technology,
okay.
right? So so we're talking specifically about the quote unquote currency, the token on top of the blockchain.
Yeah.
And so any other token, that's its own thing. I mean, obviously Ether has a lot of utility. It's been used all the time.
Yes.
It has its utility, and no one back then thought they were getting a piece of that foundation or another company. So that's why I was kind of ironically saying, fish is not a bird. Because no one ever thought on our end it was security for a second. That's one of those discussions that we are having for no particular reason in this country.
Got it. All right. Very cool. What's next?
Dinner? No, I have a couple of ideas what we should be talking about.
All right. And you told me that I don't know if you could talk about this now, but you went to an event last night.
Oh, yes.
You went to an event last night that was mildly amusing.
I should probably not say it now. I mean, there's any event, generally speaking, that's trying to educate people about blockchain is great.
Yeah.
I mean, we're trying to support as many as we can. We get invited to speak at a lot of them. And so last night we sponsored one of them and brought a lot of our team members to it. And it's unfortunate that most of the time people just don't spend a lot of diligence in preparing for those, because you really have to always go back and not only represent what you already thought you learned, but you got to go back and see if that's still the case. And there's just a lot of false information out there that's been perpetrated, unfortunately. So, but as a result, I get invited to teach a couple of classes at a couple of universities in that particular space. So I'll do that for a little bit to foster that.
You want to talk about what happened, what they were talking about?
Oh no,
no,
I don't want to.
Okay,
I don't want to embarrass anybody.
So that was not really off air.
Yeah, exactly.
All right, it was amusing though.
Off the air quote, I'll just put it out of context. Okay. I heard someplace. Let's call it this way. That some guys.
You heard in passing.
In passing, someone told someone else that if you transact in bitcoins, you always send a full bitcoin and you get change back. Children, if you
it's going into a cash register,
something like that. Like a vending machine.
Like a vending, you put $1.
It only takes dollars, and then
you put $1 in a vending machine.
Get coins back. Yes,
it's a 75-cent.
Yeah,
and you're going to get
little boys and girls. If Daddy tells you that, it's not true.
You will not get change if you send somebody your
Bitcoin. It's gone.
You're not going to get change back.
Unless he wants to send you something back. It's not happening.
Yes. I thought that was very funny, so I'm glad you shared that with us.
I didn't think it was funny. There were 100 people in the room that now believe they have to send entire Bitcoin. They all believe,
they're like, but I don't have $7,000. How am I going to? I wanted a $50 thing. Wow.
All right, Crypto Doc.
All right. Well, thank you for the show, man.
Yeah, back to work.
Okay, I know. I got to get back to the puppy dog mine.
All right. Go back to the glue factory.
Yeah. Well, good show.
Yep. Good one.